lastly, let's take a very quick look at the European markets. And European markets also closed higher after that China's stimulus measures were announced, and that was something that remained in focus also, Priyanka.
Absolutely. In fact, so it looks like a good set of cues from the global market. Talking about the US or the oil also, the crude check. Now, the crude is inched back again to $75 per barrel. It's majorly on the back. There are some fears on the Middle East front also, some tension streaming in there. But then more or less oil prices are steady. And now China's stimulus also, the hopes for China's stimulus also fades away. US crude stockpiles fall. In fact, now, you remember the crude had fallen to rate levels like $70 per barrel. It was consolidating at lower levels, but now that has inched up a little. But then now the prices look steady, at least on Friday after rising the previous session. There were fading excitement for the economic stimulus in China. China has, of course, given us some measures to support its economy. And that's the world's biggest crude importer also. So looks like a steady move coming in from the oil also. Organization of Petroleum Exporting Countries in the World, means OPEC, which has given its outlook report for 2024 and has forecast a robust demand growth for so far ahead as 2050 approaches. The producer group predicts strong energy demand growth of 24% globally between now and 2050. Additionally, it also expects robust medium-term growth in oil scaling, 112.3 million barrels per day in 2029. That's an uptick of nearly 10.1 million barrels per day versus what it was last year. Remember, just earlier this month, the Brent had fallen to below the key levels of $70 per barrel mark. That's the lowest in 33 months.
Well, absolutely. And let's also keep it going with the oil market. The Organization of Petroleum Exporting Countries, in its World Outlook report for 2024, has forecast robust demand growth for as far ahead as 2050. Now, the producer group also predicts strong energy demand growth of 24% globally between now and 2050. Additionally, it also expects robust medium-term growth in oil scaling, 112.3 million barrels per day in 2029, and that's an uptick of 10.1 million barrels per day versus last year. Remember, just earlier this month, the Brent also fell below that key $70 per barrel mark, the lowest in 33 months as well. And let's also take a quick look at gold then. And gold prices, when you take a look at them, rose about 1%, hit a record high, building on its recent rally as well as Middle East tensions fed its safe haven appeal, while investors also lashed on to fresh cues for US interest rate cuts as well. When you take a look at price movements, 1.1% uptick is what you're seeing coming in for gold, and this is after hitting a record of $2,654 per ounce. Now, gold has risen about 28% so far in the year, as well as fears of an all-out war in the Middle East also escalated. Now, when you take a look at the billions rally, that has also been propelled by the start of monetary easing by the US Federal Reserve, which also reduces the opportunity cost of holding zero-yield gold, and that is something that we're keeping a very close eye on, but keeping it going with the shimmering gains. Now, major banks expect the yellow metal to extend its record run into next year, largely driven by hefty inflows into exchange-traded funds and expectations of additional rate cuts from the global central banks as well. Let's take a look at the forecast. Most brokerages also expect the yellow metal to eye over $2,700 per ounce mark, with JP Morgan also saying that it could scale $2,850 as well.
All right, that's a quick check on the US markets, oil prices and the gold.
If you like this video, then like, share and subscribe to ET Now.